a new video of IPO analysis by ChoiceBroking. Today we will be reviewing the IPO of Data Patterns India Limited. I am Siddhi Acharya, Fundamental Research Analyst, and I welcome you all to our YouTube channel Choice. Data Patterns India Limited is a defense and aerospace electronic solution provider catering to indigenously developed defense product segment. The company's offerings cater to the entire spectrum of defense and aerospace platforms, which include air, space, land and sea. The company's systems find application on various platforms such as Tejas Light combat aircraft, Brahmos missile programs, and various communication intelligence and electronic intelligence systems. The company derives its revenue mainly from three verticals: production contract, development contracts, and annual maintenance contracts. And in FY21, majority of its revenue came from production contracts, which contributed 78% to the total revenue. From 1st April 2018 to half year ended FY22, the company reported a 40.1% CAGR rise in its order book to 581.3 crores, which is around 2.1 times of the TTM revenue. The company's client list consists of various marquee customers, which includes the Indian Government Defence Ministry, Brahmos, DRDO, Hindustan Aeronautics, Bharat Electronics, etc. On the back of repeated production contracts, the company reported a 30.7% CAGR rise in its consolidated revenue to 224 crores in FY21. Total expenditure increased by 11.8% CAGR, which was lower than the top line growth, and thus consolidated EBITDA grew by 89.8% CAGR. With relatively higher other income and lower effective tax rate, the company's reported profit after tax increased by 168.6% CAGR, and profit margin expanded from 5.9% in FY19 to 24.8% in FY21. The company has priced its IPO at a price band of 555 rupees to 585 rupees. There will be 25 shares in one lot, and at the higher price band, the total application money is 14,625 rupees. The IPO opens on 14th of December and closes on 16th of December. The company is planning to raise 588.2 crores through this IPO. Out of this, 348.2 crores will be through fresh issue and 240 crores will be through offer for sale. The company will not receive any amount from the offer for sale portion. Of the net proceeds from the fresh issue, 60.8 crore rupees will be used to repay the borrowings availed by the company. 95.2 crores will be used to fund the working capital requirements of the company. 59.8 crore rupees will be used for funding the upgrades and expansion of the existing manufacturing facilities, and the remaining amount will be used for general corporate purposes. At the higher price band, the company is demanding a TTM PE multiple of 35.6x, which is at a premium to the peer average of 30x. However, with favorable macros and diversified product portfolio, the company has the potential to expand its business and profitability. Considering all these factors, we would recommend our investors to subscribe to this issue for long term. If you liked our video, please click on the like button and do subscribe to our channel to never miss an update on the upcoming IPOs. Thank you for watching, and I will see you in the next video.
Investment in securities market are subject to market risk. Read all the related documents carefully before investing.